my name is Justine Dignam, Director of Tax Incentives and Reliefs, and I'm joined by Zoe Barraclough, my colleague, who's a Senior Tax Consultant. And today, what we wanted to do is really kind of talk to you about the importance of R&D tax credits. Now, I'm sure many of you have come across the R&D tax credits in different ways, so you may have fallen victim to lots of cold calls where people are phoning you out of the blue and telling that you can qualify for R&D, or it may well be that you just heard about it through press and PR. But today what we want to do is really kind of hopefully give you a better understanding of the R&D tax regime, talk about why it's so important, and obviously, particularly at the moment, while we're in the COVID crisis, how important the tax credits can be for a business. And actually also the way that some businesses have developed, obviously, as a result of COVID, has opened up new opportunities for businesses. We also want to talk about what qualifies and add some clarity around the qualifying expenditure, where there seems to be quite a lot of confusion in the marketplace. So we want to give some more kind of clarity to that. Could we go to the next slide, please? Okay, so today this is what we're going to cover. So we're going to cover what are R&D tax credits and why they're so important, evaluating the eligibility criteria we just talked about, and whether your business can claim, how to maximise the opportunity if you're already claiming, and we see that quite often, that often businesses claim for things that are quite obvious, but often miss out things that can maximise that claim and actually increase the claim value. The qualifying expenditure. And again, there is a lot of confusion out there in the market what actually is qualifying expenditure, and the importance of validating that as well. I think we see on a daily basis where businesses are told that they can claim, and actually when you start to do the due diligence, quite often it isn't qualifying expenditure, so we need to be really careful around that, and we'll touch on that about the revenue as well. The impact of COVID and the proposed PAYE cap, and what that means for you. So some of you may be aware of that, some of you may not be. Next slide, please. So R&D tax relief. So it's actually one of the most generous tax reliefs in the UK tax legislation. It's been around since 2000, and it provides a means of support for UK innovation. This is a way of the government actually backing businesses who choose to innovate in the UK. Quite often, the word innovation is misunderstood. So people will often think, actually, I'm not operating a company like Dyson. I'm not looking to find the cure for cancer. So they dismiss themselves away from being able to claim R&D. And that's not the case. Quite often, the hurdles aren't that high. This is about developing new products and processes in an innovative way and making an advance in science or technology to do so. And actually, even if you don't achieve the advance, it's striving to make that advance. So it's actually worth between 24 pence and 33 pence in the pound for SMEs. And it's a way of improving cash flow. So just to keep the math simple, for example, if you'd spent £100,000 on developing a new product and that qualified as qualifying expenditure, you would be able to claim the £100,000 back as normal in your accounts, but in addition to that, you would be able to claim up to £33,000 in addition from the revenue. So as you can see, it's a really valuable cash input into your business, particularly at the difficult times at the moment that a lot of businesses are facing. It's also available for loss-making companies, but it has to be the company has to be subject to corporation tax to be able to make a claim. As I say, the qualifying expenditure doesn't have to be people in white coats and labs undertaking kind of high scientific developments. It can be somebody making something faster, cheaper, lighter, or looking to develop new products or making a product significantly better in a marketplace. And it really is a way that the UK government is seeking to attract businesses to stay in the UK and to maintain operations in the UK. Although it has to be said, the development work doesn't have to be done in the UK. Next slide, please. It's also worthy of note on that if you look to undertake some development work and it actually fails, so you're unable to find the solution and solve the technical uncertainty, you can still also claim for that project. If you could just kind of bounce on those slides a little bit, exactly that, so just so it takes it through. So the reward, there's actually two schemes in the UK, the SME scheme and the large scheme known as the RDEX scheme. So if you have fewer than 500 companies in a group of companies and your turnover is less than 100 million euros or 86 million euros on the balance sheet, and the project hasn't been funded, then you will qualify as the SME scheme and receive an additional 130% tax relief. Loss-making companies can also claim a tax relief, but this can be surrendered as a loss at 14.5%. 14.5%. So the SME benefit is 24.7 pence or up to 33 pence for every pound spent on qualifying expenditure. The RDEC scheme is 13%, and the RDEC benefit is 11 pence for every pound spent on qualifying expenditure. And that's a taxable benefit, whereas the SME scheme isn't taxable. Next slide, please. So this is around the advancing technology. So the actual words from the revenues and advancing technology and science or technology, and again, that alludes to it being very much around something that's groundbreaking, that's blue sky, and it really doesn't have to be. It can be incremental, and it doesn't have to be groundbreaking. So this is all about something not being readily available out there. So if, for example, you were developing a new product. So, for example, if you were developing a new smartphone, you wouldn't be able to phone a leading provider of smartphones and ask them how they advance that technology. You would have to undergo your own projects to resolve your own uncertainties. And that's where R&D is available. So it doesn't have to be unique to the market, but it does have to be a significant advance. You need to identify gaps in the knowledge so they're not available on the web. If you could phone somebody, a colleague that's already working in that industry, and ask them how they would be able to tackle this issue, and they would be able to come up with a solution for you, that wouldn't class as R&D. If you had to to go down the process of blind alleys, a risk of failure, then that's when it comes into the world of R&D. And as I said earlier, actually, if you were unable to resolve the uncertainties and it does become an abortive project, then you still can claim the R&D on that. So it's about developing the underlying technology development. It's not off the shelf. And again, that comes down to, so if you were, for example, if you bought a telephony system and you had to integrate that into existing legacy systems, and you had to undertake a period of development and write coding, that could potentially qualify for R&D. Whereas if you were able to buy a piece of software and automatically integrate that into legacy systems, it wouldn't claim. Equally, if you were, if a client came to you and asked you to advance a product from your range, or asked you to develop a new product, if you were able to understand how to do that straight away, then it wouldn't class as R&D, because you've already got that knowledge, you've already got that insight. Next slide, please. So in terms of what you can claim here, so there's areas of qualifying expenditure that all qualify. So one of the key areas for that is staff salaries. It's worthy of note on this as well that actually, if you, as directors of the company, pay yourselves dividends, we can't claim on those. So it's all around staffing costs. We can claim for pensions, but we can't claim for dividends. So it's looking around the staffing costs. And what the revenue do there, they don't expect us to have timesheets so that you've got every hour recorded. Some people do have timesheets, but some people don't. So the revenue will expect us to take a practical and pragmatic approach on the amount of time that somebody is actually working on an R&D project. So, for example, if as a director of a company, you were to say that you worked 100% on R&D, we would say that that's unlikely, because you'd have other aspects of the business to run, so you wouldn't be able to be working 100% on R&D projects. So it's about being kind of practical about the areas and the amount of time that you would be working on costs. But we also obviously can include all the staff costs for other people who are working on those projects and doing testing, etc. Subcontracted expenditure, so where you subcontract those costs out, again, you can claim for those. On subcontractor costs, that's capped at 65%, as is it with externally provided workers as well, so any workers that you bring on board through agencies. Consume materials, so anything that you use in the process of the R&D development, testing, prototypes can all be claimed. But if that prototype is sold at the end of that process, then you can't claim for that. So it has to be have render as being commercially valueless at the end of that process. So if you can reuse those consumables, then you can't qualify those as qualifying expenditure, and you can't claim that in your R&D claim. That's an area where we do see that people falling foul of that they tend to put quite a lot of things into the consumer materials that actually don't qualify. So just be careful around that. It's an area to kind of look out for. Software licenses, that doesn't mean things like CRM or Word. That's more around CAD and software licenses that are appropriate for use within the industry and within the development process. Light, heat and power, again, we take a pragmatic approach to that and practical approach to that, and we will work that out on percentages of what that is across the business. And then also indirect qualifying activities that are associated with that as well. Next slide, please. I think the key thing to really note on any R&D claim, and when you're considering making an R&D claim, is that quite often, daily, people always say, what sectors do you cover mostly? And Zoe's going to pick and take over some of these sectors. Software is a huge one that we cover, but actually, we've pretty much done claims in most sectors, and you shouldn't discount yourself based on sector. So, we've done claims for insurance companies, we've done claims for drinks manufacturers, and that might be where they were making, the company was making a chocolate vodka. So it's about how they integrated the chocolate into the vodka without separating. We had insurance companies that were looking to integrate different legacy systems and develop an online quoting system that wasn't readily available in the market. We've had companies who are changing the way that they manufacture. So one that springs to mind is a clothing manufacturer who were making fashion items, have changed their production to doing PPE. And one of their challenges is how they stitch the garments without it becoming without the fabric then becoming permeable, because obviously if it's going on to frontline, then they have to make sure that the COVID can't be ingested through the clothing. Print companies looking for different ways of printing and advances in printing. Wind farms probably a more obvious one, and software a more obvious one. But really, the claims that we've done have been spanned practically every sector. One that we've recently done is for a taxi company who was actually they bought a telephony system and they wanted to integrate it into a CRM system, but with some development work around that. So it would mean that actually when you phoned up to book a taxi, it recognised your mobile number and it would pull up the last 3 places that you were collected from and ask if you wanted to be collected from those places. So it would automate that process and that kind of the booking system and be able to place logistically drivers in areas that were more cost beneficial. So, as I say, please don't discount yourself at all. If, whatever sector it's around kind of making sure that the claim is qualifying expenditure and that actually it fits into the legislation. Just a word of warning on that, and I know Zoe will come to that, but we're seeing at the moment a lot of nudge letters going out from the revenue that are hitting a lot of software clients, saying to make sure that actually if they have submitted an R&D claim, that actually it does qualify. And again, this goes back to where, you're getting a lot of firms that are targeting directly, being quite aggressive, getting people to submit claims. And again, clients think that it is qualifying because it's gone through the revenue, they've got the money back. But what that means actually is that it hasn't passed the tick of the kind of scrutiny of HMRC. It just means that it hasn't been picked up. And therefore it can be at any time looked at in the future. And obviously, if people have made claims year on year, they're not going to just look at the current year claim. They're going to go back and start asking for validation on the costs, the qualifying costs. And I'll pick up that a little bit further when we summarise. But I'm going to hand over to Zoe now, Zoe Barraclough, who is going to go through some of the common R&D sectors that we work with and give you some more in-depth case studies of some of the work that we've undertaken. So thank you.
Thank you. So I'm just going to run us through a few of the sectors, a few case studies, and a bit of information on the changes that have happened due to COVID. So things like the funding and really how we can maximise those claims for you as well. Can I have the next slide, please? Thank you. So the pie chart on screen shows the most common sectors where R&D claims are made. And one of the biggest sectors, as Justine's covered, is software. Over a quarter of all claims now relate to software, and 97% of software claims are made by SMEs. Surprisingly, the majority of these claims we do aren't for software companies. They're for companies that need a bespoke solution where nothing off the shelf really works for their needs. So they need to bring in a subcontractor to develop a solution for them. Manufacturing is also a major area for R&D. So manufacturers are constantly required to make things faster, lighter, stronger and cheaper. We're also seeing a lot of companies changing materials that they're using in the manufacture process. So this could be to improve quality, or it could be to reduce environmental impact. We're seeing a big reduction in the use of plastic across all manufacturing. A lot of companies are trying to develop recyclable materials. A lot of work's being carried out in areas such as the fashion industry to reduce water. And then we've got the professional, scientific and technical sector, which does include those white lab coats that you expect to see, but also has some less obvious industries in there, such as accountants, architects, legal professionals and engineers as well. So as Justine said, R&D can be anywhere, it's not limited to a sector. Can I have the next slide, please? So here are a few case studies on recent claims that we've carried out. The first one is the development of a solar carport solution for mass charging of electric vehicles. This project took place on a port, so there were a lot of challenges in designing a system that could be deployed without disruption to the port itself. The company also had to spend a lot of time and effort looking at the control systems, the battery technology, and that combination of hardware and software. We've also got a client in the beauty industry who developed a face mask quite a few years ago. And with the focus on sustainability and environmental impact, they wanted to replace the plastic element of that whilst achieving the same performance in shelf life. So a lot of work went into the material selection for the actual mask itself, and then reformulating the cream element and looking at sort of shelf life, how it would sit, what the viscosity was. There was a lot of R&D that went into that. Can I have the next slide, please? So the third case study was a project carried out by a famous pie company, and they wanted to manufacture a new range of pies that had different qualities to what they were already doing. So this project wasn't so much aimed at the end product, but more at how the equipment could be changed and a process could be developed to effectively increase production and have it on a mass scale. As Justine's already touched on, we did a claim for a taxi company as well, which comes back to software again. The company needed to make a tool to map drivers, to book jobs, calculate fare information, look at the location of customers in previous locations, and they couldn't find anything that was off the shelf, so they had to bring in developers to create that for them. The final case study on here relates to a travel company, and they wanted to create a new booking tool which would make their website easier to use. The work's more aimed at sort of the look of the website and the user experience, so there wasn't a lot of back-end development on this one, so it wouldn't qualify for R&D. But if the company had expanded this, adding in sort of new data feeds or any complex pricing models, there could be potential for a claim. So it's always worth looking into when you've got software, so we need to look at what that back-end development work was. Next slide, please. So there's a number of ways that we can maximise an R&D claim. We can look at claims for staff time, and it doesn't have to be limited to the people carrying out the physical development work. We can include people who are involved in management, concept, design, and even bookkeeping as well as a small element of their time. We can also look at whether staff training has been required, which is specific to the R&D. So, for example, if a company's had to train a member of staff to use a piece of equipment which is going to be further developed for a different purpose, these costs could potentially be included in the claim. We can also look at reimbursed expenditure within staff costs. So we're able to claim back travel as long as a member of staff has paid for that expense themselves and had the funds reimbursed to them by the company. We can also look at the relationships between EPWs and subcontractors. So we recently did a claim where we elected for a client to be connected to a subcontractor for R&D purposes. And this meant that we were able to claim 100% of the costs as opposed to the 65% cap which usually applies. As Justine's already touched on, another area worth considering is consumables. Often all materials are accounted for in purchases, and this makes it really difficult to identify materials that were effectively used up in the R&D process. So if you're consuming raw materials, it might be worth creating a nominal in your accounts to track these, or working with a specialist where you've got one key supplier to identify what a reasonable percentage could be of that. There's a few indirect costs we can consider as well, so software licenses, cleaning of an R&D area, and security. We can also look at items that have been capitalised as intangible assets. So if you've brought in a subcontractor to develop some software for you and you've capitalised that, there's potential we can claim that as well. And we're able to take the full deduction of the expenditure in the year it appears. We can also look at claiming additional projects where a new product's been developed. Has a new process been developed as well? So we can delve into that a little bit deeper and see if we can expand the scope of the claim. A project doesn't need to be successful to be eligible. It's important to know that a failed project can be claimed as long as it meets the criteria. And if it failed because it was so technically challenging, it demonstrates to HMRC that those uncertainties were so difficult that it couldn't be achieved at this time. Next slide, please. So HMRC have deployed additional resources throughout COVID and are reported to be processing 95% of claims for SMEs in 28 days. They're also, as Justine touched on, improving compliance at the moment and have recently sent out letters to companies claiming software projects, outlining what that qualifying activity is and asking them to make sure that they're eligible. It is by far one of the most complicated areas to look at for R&D because software is not something that you can see. And we're not always looking at what the functionality of the software is. We can be looking at the back end of the system. Were there any integrations? Were there any systems that didn't talk to one another? Were there any algorithms written? They're the sorts of things we'd be looking at. So it's really good that HMRC are beginning to look at that and send out those letters. Many businesses have had funding throughout COVID, and the type of funding really can have an impact on the claim. The furlough scheme is not a state aid, and if staff involved in R&D have been furloughed, they wouldn't have been working on the R&D at the time. Therefore, the costs for the furloughed staff in that period need to be removed from the R&D claim. We've also got the coronavirus statutory sick pay rebates, CBILS and bounce back loans, and these are classed as state aids and they could have an impact on an SME's claim. Depending on the type of funding that you've received, there is potential that those projects could be classed as funded and then they need to be claimed under the RDEC scheme. If you've received any of these, please get in touch with us and we can make an assessment as each case is different and we need to look at where the spend was, what sort of funding was received, what it was spent on and what the projects were. The final funding is the future fund loans. They tend to be more commercial and not state aids and won't have an impact on an R&D claim. When it comes to HMRC arrears, there's not really many changes here. So HMRC will continue to offset any repayments or tax credits against due liabilities such as CT, NI, PAYE. The main change really here has been to the VAT side of things. So the VAT Deferrals scheme is giving companies an extension to pay VAT till the 21st of June. So repayments and tax credits wouldn't be offset against those because they're not technically classed as due yet. Next slide, please. So a new tax credit cap has been announced for SMEs, which will apply to periods commencing on or after the 1st of April 2021. This applies to companies who are surrendering losses effectively for a cash tax credit. The reason HMRC have brought in this cap is to prevent companies with expenditure outside the UK rerouting it through a UK entity and taking advantage of this tax relief. These companies tend to have little employment activity in the UK and mainly are set up for the purpose of accessing that tax credit. The cap's been applied to the PAYE and NI side of things, and that's because HMRC can check this information in-house in real time and don't have to rely on any other agencies to do so. The cap won't apply to tax credits that are under £20,000. This will give SMEs and startups a chance to access a tax credit if they're not in a position to take on employees yet, so it doesn't completely rule you out. If a tax credit is above the threshold of 20,000, the cap's calculated as 20,000 plus 3 times the company's PAYE and NIC. If you're using a connected EPW or a subcontractor to carry out R&D activity, the proportion of their PAYE and NIC can be included in the calculation as well, so there is potential to make that larger. There are a few exceptions to the cap, so the company can claim an uncapped tax credit where they actively manage IP and no more than 15% of overall expenditure relates to an EPW or another party. So suitable IP includes things like patents, trademarks, plant breeders' rights, and a few others. It also does apply to any equivalent which is outside of the UK. This has recently been extended to include company know-how as well. Really, I think the important thing is that in round numbers, if a company spends less than £60,000 on R&D and they're loss-making, the PAYE cap probably won't have any impact on the credit. If you've got a higher level of spend and losses, it's worth getting in touch with us and we can help you assess how that would impact you. Next slide, please. So I'm going to hand it back over to Justine just to take you through some of the key takeaways and just the main points to remember. Thanks.
Thank you, Zoe. So hopefully you found that informative and enjoyable, hopefully. Just wanted to kind of go back to some of the key takeaways for today, and then we'll go through to the Q&As. I think, more than anything, R&D claims are so important at the moment because as businesses are looking for injections of cash flow, then, the R&D scheme is something that's there. And if you qualify for it, you should be getting the money. So, please don't hesitate to get in touch. We qualify an R&D claim. We have a 10-minute, 15-minute telephone call with you just to kind of talk through the projects that you're working on. And from that, we will be able to tell you whether you do have a valid R&D claim. What's important is that if you are considering making an R&D claim, because of the new complexities, because of the COVID support schemes and also the PAYE cap that Zoe's gone through, they are more complex now. So it's really important that you do engage with a specialist provider to help you guide you through that process. And just to reiterate, the project doesn't have to have been completed or successful to be part of that claim. So the project could have been aborted and it could still be a valid claim. I think, in terms of the UK market, there's less than 60,000 claims, R&D claims made a year, which is a drop in the ocean compared to the amount of businesses that should be claiming. There's some 3.5 million businesses. Now, not all of those will be able to claim, but certainly there'll be more than 60,000 that should be claiming, that aren't claiming. You can go back to accounting periods and the average claim in the UK is £52,000. So, it's not difficult to do the maths on that to know that, most businesses would be delighted to receive a cash injection of £104,000. We, on average, complete 750 claims a year for UK businesses and generate over £40 million worth of tax benefits for clients. So, it's what we do. We're very specialist in what we do in this niche area of tax, and we're here to help you. I would leave a note of caution to say beware of people who cold call and tell you that you've got a valid claim without actually undertaking any due diligence. Ultimately, the submission that you make to the revenue is self-assessment, and should you be open to any inquiry, then you would be responsible for any findings from that inquiry. We're confident we have 100% track record with the revenue. And if in the event that you are subject to an inquiry, we will defend that inquiry without further fees. We always submit technical reports as part of the submission, and we do that because we believe that actually without it, how can you justify the claim? And, it's important for us that we go through with the revenue, telling the story of why the claim is being made, what the technological uncertainties were, and we validate that with our due diligence of working with the accountant and yourselves as a client. So I hope we've covered off everything that you expected today. And as I say, I hope you found it both informative and enjoyable. I'm going to hand back over now to Catherine to pick up on any of the Q&As, cute questions that have come through. And Zoe and I will answer any appropriately. Thank you.
Thank you very much. That was really, really interesting. Thank you. We have had a couple of questions come through as we've been through the presentation, which I think those were answered. So thank you for those. We have had one come through just now saying, would recruitment costs such as Tier 2 visa costs for staff recruited specifically to drive forward an R&D agenda be considered as a valid cost to claim? I know which one of you is best placed to answer that one.
Zoe, do you want to pick that up?
I'll pick that one up. So yeah, if we're looking at recruitment costs, unfortunately aren't allowable for R&D, but the staff time, so any gross salary, employer's NI, and any pension costs can be included for that employee once they're engaged in the R&D activity.
Thank you, that's great. Are there any more questions that anyone would like to ask?
I'm just going to pick up on the question before as well, because it just mentions about the funding. The only thing we didn't cover in there is that a claim can be covered by funding of a customer as well. So if you've got a customer that comes to you and says, can you develop this for me? And they're paying you to do that development work, then that could potentially be under our deck as well. If you've got customer funding, effectively the IP belongs to the client that's asking you to undertake that work. So there's a difference between state aid funding and customer funding. So I just wanted to make that clear.
Just waiting to see if anything comes through. I know it can take a bit longer when you're typing your questions out. Right, well, if you do have any other additional questions and you would like to discuss these separately, then the best way to get in touch with us would be either with your main daims contact. You can reply to the emails you've received regarding this email, which will come through to me, and I can forward those on. Or equally, you can use our website, the contact form, and that will come through to us as well, and we can take things forward from there. I just wanted to say thank you very much for your time this morning. I really hope that you found this informative and it's been useful for you. Also, of course, thank you to Justine and Zoe for your time this morning as well. That's been very interesting. Thanks again and take care, everyone.